This one's serious. The economic data just dropped, and it's rough. The markets are diving, fear is skyrocketing, and yes, Donald Trump just made a move that's sending shockwaves around the world. What's really going on? Why is the VIX surging? Why are stocks sliding? And how does all of this impact XRP, crypto, and your portfolio? Welcome back to Crypto Labs News, where we cut through the noise and bring you what matters most in this volatile financial landscape. Now, let's dive in, because as you can see, today is a full-on Red Sea across the board. The crypto market, the stock market, everything is pulling back hard. But guess what? XRP is actually holding its ground relatively well, still trading around 31 cents, which all things considered, isn't too bad. Meanwhile, Bitcoin dropped to $114,000. But here's the key. It managed to fill the CME gap that everyone's been watching. That gap is now officially closed, and that's one less bearish anchor weighing things down. Looking at traditional markets, the S&P 500 fell roughly 1.7%, while the Nasdaq took a sharper dip, nearly 2%. But the real headline? The VIX, aka the Fear Index, jumped more than 30% in a single day. That is massive, and it's being fueled by multiple fear catalysts that we're going to walk you through right now. First up, tariffs. They officially went into effect today, and that alone is enough to rattle global markets. But the real blow came this morning when the U.S. jobs data was released, and it wasn't just disappointing, it was confusing, the U.S. economy added. Only 73,000 jobs in July, far below the expected 106,000. Unemployment ticked up to 4.2%, which was in line with forecasts, but it still doesn't feel great when paired with that weak hiring data. But here's the kicker, massive revisions. June's job report was slashed by 125,000 jobs. May's was also cut significantly. In total, 258,000 jobs just vanished from the data. That's not a rounding error. That's something much deeper. Now, enter Donald Trump. He came out swinging. Again, blasting Jerome Powell, demanding rate cuts, and claiming tariffs are bringing in billions to the U.S. He even suggested that if Powell won't lower rates, the Federal Reserve Board should take over. That's not just political pressure. That's a challenge to the independence of the federal, and here's where it gets really interesting. For the first time in years, we're seeing cracks within the Fed itself. Two Fed officials went against Powell recently, disagreeing with the current policy path. Could this lead to an internal revolt within the central bank? Maybe. And markets are already pricing in the drama. Before the jobs report, traders were giving just 30% odds of a rate cut in September. After the bad numbers, those odds surged to 75%. That's a huge shift, and fast. Now, if you've been following Crypto Labs News, you already know the playbook. Weak jobs data, while scary on the surface, actually increases the chance of rate cuts. Why? Because less employment means less consumer spending. Less spending usually leads to lower inflation. And when inflation comes down, the Fed has more room to ease. But here's the other side of the coin. Weak labor markets often signal deeper economic trouble. If people can't find jobs, if spending collapses, it's not just a rate cut environment. It's a recession. Think 2008. Think early 80s. That's when the real pain hits. We're not there yet, but the revisions to jobs data are definitely raising eyebrows. If that wasn't enough, Trump added fuel to the fire by announcing that he's ordered 2 nuclear submarines to reposition near Russian waters. That's a big move, and markets react instantly to these kinds of geopolitical escalations. The VIX had started calming down, but the moment that news broke, it surged again. To put things in perspective, anything under 20 on the VIX is considered a calm or bullish market. Once you get over 20, fear takes over, and we're now climbing well above that threshold. Not a great sign short-term, but we're also seeing signs of an upcoming technical shift. Specifically, we're approaching a bearish crossover on the 1348's exponential moving averages. If that confirms, it could indicate more downside ahead. Now here's something not many are talking about: the calendar. August is notoriously bad for markets, especially in the year after a U.S. election. It's also ghost month in many Asian cultures, a time when big decisions are avoided. Investors pull back, liquidity dries up, and markets get wobbly. Whether you're superstitious or not, there's a reason big institutional money tends to be cautious this time of year. On top of that, It's vacation season. In Europe, people are already logging off until September. Offices go dark. Liquidity drops. And low-volume markets are ripe for exaggerated moves, both up and down. So yes, it's a rough setup for August. But does that mean all hope is lost? Not at all. And this is exactly why we at CryptoNews never tell you to buy, sell, or hold. We don't give financial advice. We simply bring you the truth so you can make your own informed decisions. Quick warning: be extra cautious with your crypto transactions. I just heard a story from a family member who mistyped a wallet address and lost a chunk of crypto forever. There's no undo button. Always double-check everything before you send. Now, here's the bright spot. U.S. Treasury Secretary Scott Bessent just came out and said we've officially entered a golden era of crypto in America. That's a big deal. He's encouraging founders to build here, launch protocols here, and hire here. That's the most pro-crypto statement we've heard from the Treasury in years, and it doesn't stop there. The SEC's crypto division is hitting the road to meet stakeholders and get more voices involved in shaping regulation. This is a massive shift from the Gensler days. Same agency, completely new energy. We're moving toward engagement, not enforcement. So yes, markets are fearful. Yes, there's volatility. But long-term, we're more bullish than ever on crypto, and especially on XRP. The macro is shifting, the regulation is evolving, and the institutions are circling that. If you haven't subscribed yet to CryptoNews, now's the time. Hit that bell so you don't miss any updates. Check the description for resources, affiliate links, and ways to support the channel. But more than anything, smash that like button and leave a comment. 8 for infinity and beyond. If you're still with us, thank you for watching. Stay smart, stay safe. And like we always say here at CryptoNews, let's make a lot of money.